this morning, the Ghana cedi has started appreciating against some major trading currencies. Joy News check show that the cedi has gained 0.20% against the dollar. Let's take a quick look at the forex market this morning. Now, if you look at what's happening, the Ghana cedi is going for, the dollar is going for 9 cedi, 90 pesos to the dollar, also selling at 11 cedis, 0.77 pesos to the pounds. It is also selling at 9 to 7 cedis. The euro is selling at 9 cedis, 70 pesos. That's what the forex market looks like this morning. So that's what is happening on the forex market. So let me just go over how the forex market is this morning. So if you look at the performance, the dollar is selling for 9 cedis, 90 pesos. That's how much the dollar is selling. The pound is also selling at 11 cedis, 70 pesos. That's what a pound is selling for on the market this morning. It is also doing, the euro is doing 9 cedis, 87 pesos. So that's how much it's selling on the market this morning. But this is coming a day after government of Ghana announced that it has received in full the $750 million loan from the Afri-Exim Bank. But could that be the only factor resulting in the recent appreciation? My colleague Elton Brobe joins me on Zoom with some information on this development. Elton, what have we gathered?
Well, so Kojo, what we are picking is that already the $750 million, the Exim, loan has already hit the accounts of Bank of Ghana, and that perhaps explains the reason why we have some dollars in the system. So there's availability. Remember last week we were told that the deficit was around $80 million. That is how much businesses want and they are not getting. So there was a deficit of $80 million needed to be filled. And what we are thinking is that with the $750 million available, government has now the capacity to meet the demands of those in need of dollars for especially import. These are the OMC, the oil marketing companies, and the other business that require dollars on a daily basis to transact their business. But with the availability of dollars by the Bank of Ghana, what it means is that they no longer have to go to the black market, if you like, to buy dollars at a high rate. So there is this money available, $750 million US. The government has made it clear that part of the money will go into the payment of contractors, the payment of ongoing works already undertaken by government, meaning that there will be a lot of dollars to convert into cedis for businesses. If you put that aside, government is also expecting about $1.5 billion from the cocoa syndicated loans, and that is expected to come in somewhere in October. That will make available the needed money for Ghana Cocoa Board to purchase beans. So you have dollars buying cedis, meaning that there will be a lot of dollars available for those that require it. So this has been government, expectation all along. And then gradually, the 750 is available. But last week we were told by the Minister of State at the Finance Ministry, Charles Adibwahim, that we should expect some stability in the currency, arena this week. And it looks like it is beginning to bear fruit. 750 available, 1.5 coming in October. And the expectation is that there will be over $2 billion available for businesses to fall on. And that means that if world crude oil on the world market falls, we should be able to see evidence of it at the pumps, because then dollar will be available to the OMC to go out there and buy, the products and bring it down, so that we can, the citizens or those who buy fuel can have some reliefs.
What do we know about the negotiation with the International Monetary Fund?
So as you are aware, the finance minister was out of town for almost 2 weeks. 2 weeks. Now, amongst his engagement was this meeting with the International Monetary Fund. But what we are hearing is that there will be a lot of dollars to convert into cedis for especially import. These are the OMC, the oil marketing companies, and the other business that require dollars on a daily basis to transact their business. So of the Managing Director of the International Monetary Fund, Kristalina Ivanov-Georgieva in Washington, D.C. Yesterday, we reported a tweet by the IMF, Managing Director, in which he said that discussions were very constructive and that the IMF is ready to offer government some effort of assistance at restoring the economic to pre-pandemic state. Now, what I'm picking from the finance ministry is that was the first of such meeting. Now, the broader meeting has also started, again being led by the finance minister. And there's an agreement that was already been reached between government of Ghana and the IMF. And the IMF is willing to approve $3 billion. That is a financial package for Ghana in the fourth quarter of this year that we are looking at between October to December. Government of Ghana should receive some $3 billion in financial package. Now, the funds will come in tranches as a balance of payment support. At least what we are picking is that the first $1 billion may however come in by the end of the first quarter of 2020. So that is between February and March. So $3 billion will be signed on between October and December this year. But you are likely to see $1 billion hit the accounts of Bank of Ghana by the end of the first quarter of 2023.
All right, thank you very much. So that's my colleague Elton John Brobe with those details. They're joining us for more on this is economist Dr. Josh Bamfo, a senior partner at Anderson Tax Nigeria. Doc, thank you so much for joining us. What could be causing the cedi to gain some point against the dollar now? My colleague have just enumerated the fact that the Afri-Exim Bank loan is here. IMF is also going to support us. The syndicated loan will be coming. Are these the factors or there are more?
Major factors, that is driving the appreciation of the cedi. As we discussed the last time, it is very important that, BOG injects more US dollars into the market and to meet the excess, demand, in that particular market. And that is very critical. Apart from the fact that we have the Afri-Exim loan of 750 million hitting the bank, the account of BOG, you need to also bear in mind the importance of the signaling effect when it comes to speculators. Whenever there's a shortage, what happens is that it's a self-fulfilling prophecy. Agents within that market also feed into it. So if I had, dollars, and I didn't have an immediate use for that, for those dollars, I'll keep holding on to them until the cedi continues to depreciate. Then I would like to maximize that and sell it only when I think that the price has hit its peak. So now that the agents are aware that, the 750 million USD has hit the account of BOG. And we also know that in the last quarter of this year, we're going to have this cocoa syndicated loan of about $1 billion being injected in the market. And the likelihood that, we might get another $1 billion in the first quarter of 2023 through the IMF program as a potential first tranche of loans. If I'm a speculator, I'm like, look, there's going to be a consistent injection of USD into the market for the next, 6 months, for example. So I'm not going to hold on to USD. I'm not going to hoard USD. So speculators are going to react quickly by trying to sell off, having short sell of those USD. And that then injects more USD into the market. And that leads to a further appreciation of the Ghana cedi against the USD and other hard currencies. So apart from the funds being available now to meet the excess demand, it's also going to have some signaling effect for speculators, and that will reinforce the appreciation of the USD, at least in the short to medium term. But ultimately, we need to restructure our economy so that we become more export-oriented, so that we don't actually have this problem going forward. We cannot be dependent on dollars to always solve these problems. This is a short-term remedy. Ultimately, you need to restructure your economy to be more export-oriented and more import substituting to have a sustained solution to this problem.
So what that means is that for us to sustain the gains, we need to then change the structure of our economy long term. In the interim, what must we do right to ensure that the cedi does not slip again?
So in the interim, I think that what government is doing now is the best they can do under the circumstances, because until they get access to the international market, they didn't have full control of accessibility to USD in the short term. Luckily for them, they've got an Afri-Exim loan. The Cocoa Syngenta loan is going to come in, and then you're going to have the IMF program. My expectation that all of this is going to build confidence in the economy, especially in the investment market. So by early next year, my expectation is that hopefully, we'll have the depreciation stabilized, and we'll have inflation coming down, and hopefully we'll have these independent credit rating agencies upgrade our sovereign credit rating. And if that happens, government can always fall back in terms of borrowing from the investment community when it comes to the international market. But that said, all these are short-term remedies. All right, so I can expect the economy on the path of stabilization, but we need to go back to our growth strategy of industrialization and export orientation. That is the only way we can have a sustained, stabilization of the economy and back to the high economic growth rate we experienced prior to COVID-19 in 2020.
But is that not what the government wanted to do with the introduction of the 1D, 1F, which is still landed us where we are? What should they be doing differently now?
All right. So the 1D, 1F, one district, one factory, was an excellent industrialization policy. What was important is you need other factors to, help you make it a success. One of the major factors that is going to help the 1D, one factory, if it's implemented well, to be a success, is access to, the African market through the Africa Continental Free Trade Agreement. Hitherto, most of our exports were going outside of Africa. Today, we can access, other African countries, at very low or even zero import duty rates. So that is a potential, market that we need to tap into. And that's the reason why I believe that the government refocus on the one district, one factory, which is a highly decentralized industrialization program, would help with our export orientation mindset and program going forward. So I believe that once we stabilize the economy and we re-emphasize in making sure that we have industries that manufacture products, especially raw materials, process them and export them to the African market as well as outside of the African market, and also provide for some consumption locally in terms of import substitution so that we don't have excess demand for imports, which can then lead to this problem down the line. Then we can actually have a sustained solution to this depreciation problem.
Thank you so much, Doc, for joining us. Dr. Josh Bamfo is head of transfer pricing at Anderson in charge of Africa and the Middle East.